Good afternoon. Robert Rayburn here from Life Pro Asset Management. It is January 17th of 2023. It is the second update of the new year. We're certainly glad that everyone could join, and I hope that everyone was able to enjoy that extra day off here on that long weekend right after the holiday season. Now, as it relates to the overall market, we've had a decent start to the year. Now, it doesn't take much to do better than we were last year at this time. We have a lot of work to do, but the theme of this week's presentation is to stay focused on the forest through the trees. We don't want to make some of those mistakes that we made last year. When we look back, we certainly made some mistakes. And I think one of those was getting a little bit too hyper-focused on the macro, getting a little bit too hyper-focused on individual data points, and really staying on some of those big secular themes that are shifting in the market. That's what can really help us steer through this, what we consider a once-in-a-decade transition in market leadership. And so we're staying focused on what are the areas of emerging leadership and what are the individual companies that are acting as leaders within those areas of emerging tailwinds. So we'll go ahead and get started this week. And as you might suspect, the title of this week's presentation is The Forest Through the Trees. Four big themes I want everyone to focus on. The US-led growth bubble has popped, okay? So when we think of high PE stocks across technology, biotech, SPACs, IPOs, all of those things, there's going to be a few companies that are the real deal, right? So you don't want to necessarily chastise every company just because it's in a certain sector. But we want to be very selective in those areas and be very careful and not try to chase some of the short cover rallies we've seen here in the first couple of weeks. The last decade's leadership is likely not going to return as leadership. That's the market's history through time. So what do we want to focus on? A few areas that are really emerging as not sort of multi-week trends, but multi-year trends, which are old economy stocks over the new economy, rock over paper. So in other words, those hard assets that are found in the ground or industrial assets over paper or digital assets. And then lastly, Europe, Japan, and emerging markets over the US. In short, international versus US. We've had probably about 12, 13, 14 years of underperformance of international markets versus the US. We think that's coming to an end. And if you're a US investor, we want to focus on US assets that benefit from that specific trend. So when we think of that old economy versus the new economy, all we have to do is look at the picture, look at the charts here. So when we look at the S&P 500, we look at the technology weight relative to energy, materials, and industrials. We think one of the big themes or big trades over the next couple of years is the convergence of this technology weight with energy, materials, and industrials. Energy got the party started. We think materials and industrials are going to do the heavy lifting this year. You can see it in the weights of our portfolio. Energy down a little bit. Industrials and materials are leading in terms of overall weights. We think this is a multi-year move. Stocks are cheap. Their earnings are improving in a really tough macro environment. They're under-owned, they're hated. People are just simply not interested in hearing the stories behind these companies. So when we get that set up with better earnings, good prices, and much maligned and under-owned, that's where we want to move toward. That's where we can get a lot of upside. And so far, that's been working. Even when on those days where we've seen technology have short cover rallies, these things have held in like champs and actually been able to outperform the market on those days. Early cycle leadership, we talk a lot about this when we're going through bear markets. How can we identify those early leaders? Well, we want to understand what are the stocks that are bottoming ahead of the overall market? What are those stocks that can move up in a bad tape or from a relative strength basis on down days and up days are both acting better than the overall market? We know that the consensus and the overall narrative right now is that of recession. And we are on the page that the economy is likely on a headline basis going to continue to weaken here over the next few months because it is coming off a pretty high base. That said, it's interesting which stocks and sectors are acting as leadership. Look at the steel index relative to the S&P 500 on this chart on the left. That is a multi-year breakout relative to the S&P 500 going all the way back to 2013. So we're talking about a decade-long trend shift out of S&P into steels. Now we look at the S&P materials. So what are materials? That would be chemical stocks, gold stocks, mining stocks as it relates to coal and metallurgical coal, thermal coal, iron ore, copper, those types of names. Again, big breakouts, big base, multi-year bases, multi-year breakouts, and really getting to this trend line as well. And we're going to go into the copper and the mining names specifically, but they've already broken that trend. The only thing holding this group back is really the chemicals. So that's, again, when we think of the narrative of recession and doomsday and everything else that's going on out there, slowdown, absolutely. We think that's probably in the cards at some point. Doomsday, probably not. And the real question I think we all need to ask ourselves is, how negative are people in the market, right? Because if we get a slowdown, that's probably a good thing for stocks because so much bad news is priced in. Just look at Europe. We've gotten the equivalent of $200 natural gas that was priced in at one point, war, recession, inflation. I mean, Europe's faced it all over the last year, and it's still alive, right? And Europe is starting to outperform. We'll go through that in a bit. International versus US. This is, if there's one chart over the next year, that's probably the most important thing that everyone could take away. It is this chart. The US has outperformed international stocks for the better part of what? Let's see, 14 years now. 14 years. And it's the scale, right? We're not talking about a 1 or 2 standard deviation move in terms of decade-long outperformance. We're talking almost 3 standard deviations, or what's called a 3 sigma move. This, we believe, is going to at least come down to that 1 standard deviation line and below. We think this is the trade of the decade. We think that international stocks, European, Japanese, Chinese, emerging markets, and US assets that benefit from that type of trend shift are going to outperform, we believe are going to outperform here over the next few years. So that's really, at the end of the day, what we're focused on. How do we benefit from this major shift? And if we get this right, we think that we can create a lot of value for clients. So why, you may ask, is Europe outperforming with all of that bad news? Quite simple. Look at the composition of the European markets. What are European markets structurally underweight? Technology. Technology only represents 7% of the overall market. What makes up a big chunk of the market? Energy, materials, and industrials at 28%. So again, you see where the pieces of this puzzle are coming together. We see the emerging leadership of industrial assets, old economy assets in the US relative to technology. We see that Europe is outperforming the US. And what are the big components in Europe? Old economy stocks versus new economy stocks. And we see that again in emerging markets, in China, in Japan. There is a consistent theme here of old economy over new economy. And we don't want to ignore that. We ignore that at our peril. The other big area is gold. We talked about paying attention to stocks that do well during bear markets, but not because they're defensive in nature, but because they're possibly emerging areas of future leadership in the next bull cycle. Notice what's happened here with gold over the last year. As stocks have come down, 33% for the NASDAQ, 20% for the S&P 500, gold was flat last year. When on those moments, those short moments, those short windows where the S&P was strong last year, S&P up 7.3%, triple Qs up 1.4%, gold up 9%. Gold up 2.9 versus 2.1 on that year-to-date 2023. So on those up moments, up the swings of the market, gold is outperformed. During those big risk-off moments in the market, gold is outperformed. That is a sign of enduring market leadership or emerging market leadership. And then, of course, that breakout to the upside, we think that the gold names could be a big secular leader in the next bull market. Copper, we're seeing the exact same thing. While the world freaks out over the economy, look what's breaking out. Copper, Dr. Copper. You know why it's called Dr. Copper? because it's a gauge of global manufacturing activity. If you got copper breaking out, yet the rest of the crowd is net short, that is a bullish sign that we want to pay attention to. So bottom line, ladies and gentlemen, stop getting distracted by the economic doomsday news stories out there. Focus on what the market is really trying to tell us. And that's 3 big bullet points. Inflation and recession is a distraction from the bigger picture. The old economy is moving back into growth mode, and those traditional growth stocks are actually kind of on their way to become value stocks over the next few years if they continue to go down in price. But there's a process and a derating that takes place. There's a market share shift that takes place. We don't want to fight that. Go with the tailwinds of the old economy. And lastly, we believe that the rest of the world is attractively valued relative to U.S. assets. That's what we got for you this week. Hope you have a great week. If you have any questions or concerns, please feel free to reach out to our team at 888-543-3776. Or, of course, please feel free to reach out to your advisor. Thank you again and have an absolutely fantastic week. Talk to you soon.